Welcome to Investors Insights, episode 156. Please keep sending us your comments and questions. They help us to bring you the information that you want. With that said, we have some good information to share with you, so let's jump right in.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Guys, good morning.
Morning.
Greg is in meetings, so it's just the three of us. A lot to cover this morning. Really, it's a new month. It's a new quarter. So there's a lot of things that we're looking at. Some of the things are earnings expectations have been lowered. Also, we're looking for oil to stabilize. And the dollar. The dollar is weakened a little bit, which is good for multinational firms. Right. And then China. China might be the reason that the Fed actually holds off, especially in April. So, Trey, talk about that in more depth.
Yeah, definitely. Yeah. So we kind of touched on it this morning. There's really three big themes we're watching going forward from here. The Fed statement last week really pushed up the market. Janet Yellen came out very dovish, which means very much more easy, which canceled any kind of thoughts that April was what's called a live meeting, that they were going to raise rates. And so with the Fed kind of out of the news until their June meeting, so it probably won't pick back up again in May, there's two things that are probably going to be driving the market, oil and earnings. And so with earnings starting up here, the last fourth quarter is finally completely in the books. It was not a great quarter, fourth quarter. Earnings were down 4.2% year over year. That's the worst quarter since Q2 2009. Like Bobby said, expectations aren't great for the first quarter, but that will likely be driving the market. The other thing that's been driving the market lately has been oil. Year to date, and last year, oil really was the driver of market. Like we said, last year, 12 days, the market didn't go with oil. However, we've started over the last few weeks seeing the market possibly decouple from oil a little bit. That's what we're going to watch closely. Oil's down a little over 12% from its high. The market really hasn't followed suit. And so either the market's going to catch up, or we've actually started seeing a decoupling, which would be a healthy market. So that's what we're going to have to watch very closely in the coming weeks. And so that's those two things: earnings and does the market continue to decouple from oil will be very big.
Yeah, and really the past 6 weeks, like I said, the dollar has weakened a little bit.
Yeah,
and so for multinational firms, that's great. That could help earnings. Where the expectations are so low, we could see some surprises.
Right, very low bar, easy to jump over.
So helps you with the international sales, which of course a lot of them are nearly 40, 50, 60% international sales.
Right.
So
as you talk about the IPO market, you had some very interesting points to make this morning.
Yeah, it's fascinating to look at. Bobby, Trey, and I were looking at this morning, and to Trey's point about larger corporations being a little bit more flat on the earnings side, just the IPO market, or that's the initial public offering, when you bring the company together and you go out and raise money to go the next step, that's a matter of business confidence. So that's an indicator we watch. And the figures are fascinating. Trey made this point. He's right. I mean, the first quarter of this year, since we're just ending a quarter, the IPO market is basically stopped almost. And the exact figure was there were 8 deals done in the first quarter. Of those 8, it only totaled about $700 million, which is just a drop in the bucket in terms of what IPOs normally do. And like with Trey on the quarterly earning, going back to 2009, that's the worst IPO start to a year since 2009 first quarter. To give you some compare and contrast, this same quarter last year, companies went to the public market with $5.5 billion with a B, with 34 deals, and the high point was about $37.6 billion roughly in third quarter of 2014. So you can see the confidence of going to market has clearly slowed. And the other thing we were interested in, we did look at the 8 deals that were done, and the 8 deals that were done were like startup healthcare companies where the insiders or the management took about 40% of the position in the company. Normally, when you do an IPO, it's only about 20%. So these are ones that were kind of being pushed from the inside anyway. But the reason we're watching that, to Trey and Bobby's point, global slowdown's part of that. But the other thing that's part of it is the political climate with capital gains and things like that being on the table.
Not a lot of confidence.
Exactly. There's just not a lot of confidence that you want to go out there and do more equipment and bigger plants and everything else, which is why we're seeing this really flat right now.
Yeah, we had a solid jobs growth report come out last week. I think the Fed will probably hold off in April. And then so we're watching that closely and really looking forward. April 11th starts earnings season. And so next week will be big for that. So thank you for watching. Please keep your questions coming, and we'll see you next week.